Ladies and gentlemen, Kim here. Welcome to the daily update. Hope you guys had a good day trading. Today, market is down about 1.3% there on the S&P Semiconductor. Actually, the Nasdaq down 1.5%. Semiconductor got hit 2.5% negative. Dow 1.3%. So along with the Russell 2000 trends per same banks got hit a little harder today. Energy is green today. No surprise there. Along with the utilities. We got biotech down 2.5%, healthcare 2%. Home builders is the weakest link today with a 4% negative. Retail down 2%. Emerging market down a little bit. Bitcoin pretty much fought there. Gold, silver, miners. These guys made a move today. 1 or 2% positive. Dollar slightly up. Oil up. Treasury bond up. VIX popped a little bit. Let's stick with S&P 500 ETF. Spider. 65-minute chart here. So this is where we closed yesterday. And it looks like we gapped down here. Seeing the follow through from that, shooting star candle, right? What happened was after that gap down, my micro-term moving average was in that vicinity. And then you can see that we found support right there, right? Bears trying to bring it down on that first hour. That lower wick signifies that bears try to do that. And then you see how we threw that hammer candle. Keep in mind, these guys are opposite from each other, right? That's a shooting star. That's hammer. What I talked about on the last night's analysis is that you need to see a follow through, especially even with that shooting star candle, because we saw that shooting star candle right here. Never materialized it because we didn't see that follow through. You see right here, this one looks like it's not a true form of a hammer candle, but it has a similar properties there. You can see that candle with the lower wick, upper body, has a big fat body, hammer candle there. See that follow through, and then you can see it, market kind of sustained at least for that day. Well, here, this guy, we threw that hammer, but there's no follow through, right? What buyers need to do is at least fill the gap entirety of it. Now that down gap, that's a small down gap, but this down gap is open. Bulls trying to bring it up, fill the gap, didn't do that. And so you see there's that poopy candle we've been talking a lot about in the last couple months. There's that poopy candle there. There's no follow through after that hammer candle. And what happened was that micro-term moving average for the first time since earlier this month, couple weeks ago, you can see that micro-term moving average is lost. And then it is now acting as resistance. And then on that last hour, there's a shaved candle there. All the stops are getting taken on. Anybody who went long in this vicinity after this gap up yesterday, they're all bailing today. And that's what that price to action was all about. Again, two things happen for bears. The down gap is open and the micro-term moving average are no longer supporting the buyers as of today. So bears have accumulated a little bit of weapons here. The down gap and retain that micro-term moving average to support the bears, right? So, and also in that process, what it has done is that this up gap has been filled. And looks like as of now, we're not seeing any evidence that up gap, that filled up gap is acting as or support. And it might happen tomorrow. For now, there's no evidence of that. So as I zoom out a little bit, and I've given you these levels, yesterday and a few days, or pretty much this week. And so you can see, which I talked about yesterday, should there be any kind of decline? Should there be any kind of shenanigans? 441, this is the band of support we talked about yesterday. This is the level that bulls must defend and protect if they want to see bulls attacking 460. There's a big down gap at 460. Right now, next level of support is this 440, 441 level. Remember, prior resistance acting as new support, and my short-term moving average currently residing just underneath it here, 439, 440. So this level is gonna be a strong support because we have that strong pivot. Remember that swing high right here, that swing high pivot, and my short-term moving average is now, you know, rising, and that's where it is residing at 440 and 441. So if the bears continues to push tomorrow, 441.03 in that vicinity, 440 or so is a level to you know, watch. Is there any hope for the bulls in the short term and the micro term? Well, I think, you know, if bulls want to see any kind of a reversal here, obviously need to reclaim that micro term moving average. We did feel that down gap completely on that last hour. I wonder if there's going to be any kind of gap up. So I think only way the bulls can bring this back up is to some kind of a gap up and then reclaim that micro term moving average and that fill this down gap. As long as this down gap is open, as long as we're below the micro term moving average, I think bears going to find a way to bring it down to 441, retest that you know, short-term moving average. So check out that oscillator and see if we can extract any more information. Just quickly, we'll get back to the analysis, but quickly, I want to let you guys know that during this week, I am promoting my membership here. So I do have a special invitation for you guys. If you are interested, if you've been thinking about joining Traders Club and trading with me here, so this promo is for investor membership and the premier. It's not for VIP, and these guys are usually here. The price is there for annual, but for this promo sign up, you'll save 1,000 for investor for annual membership only to take advantage of this membership plan, and the premier for $2,000. And so, and I think one of the biggest thing about majority of retail traders and investors, you know, is that they focus so much on the short-term fluctuations, and then they miss out the longer-term rallies and stuff like that. And so if you want to learn how to truly position trade in the market, you want to learn how to you know, invest in the long term, learn how to balance your portfolio or build your portfolio and grow your portfolio over time instead of, you know, out there hustling every single day, you know, day trading, short-term trading, getting in and out of trade, chopping to death. And then you realize you missed out the move that could, you know, the primary term uptrend that could last maybe 7, 8, maybe a year or two. And so here at Traders Club, I teach my members to stick with the long-term outlook. Do not let the short-term fluctuations get to you, and click on the promo sign up, and you can able to take advantage of this special promo here. And then with that, you'll get these two new report that I just posted and published. So I tweeted out earlier this morning that there's that bearish divergence on the price, and with that, bears are attacking again. And with that, we've lost that pivot there on the oscillator. So I'm going to delete that. So now what we're dealing with, you got that, you know, higher high on the price action, lower high on the oscillator. And with that bearish divergence, definitely bears are bringing it down. So next level of support for the oscillator is somewhere here. So you can see we just start coming down. There's a whole lot of room here. There's a whole lot of real estate on that oscillator. That means bears can bring it down. Bears can still make the life miserable for the bulls, bringing it down. Re-challenge this level at 441, 433. Keep in mind, remember what I talked about yesterday, bears are not going anywhere as long as this down gap is open, right? So this is going to be the battleground. 440, 430s or so. This is a level that bulls want to protect. And obviously for you angry bears, because of what we witnessed here, you wanna see destruction. You break below all of these moving averages and create chaos. I'm gonna come back for you. We'll reassess the situation. Enjoy your evening. Go trading tomorrow.